Gold prices are lower on Tuesday. Of course, we may have found some sort of support of a bottom because they were much further down earlier. We'll also talk about, it looks like somebody is finally matching Chinese bids when it comes to oil. But here first to talk to us about the gold trade is Tom Vitiello. Tom, it's great to have you back here on the NYMEX. What are you seeing in the gold trade? You think we've seen some sort of bottom? We've tested quite a point here.
Yeah, well, 1251. We had that low the other day in the 50s, and then there was that short covering rally when they didn't come to a deal over the weekend. So it rallied in everybody's face yesterday, and then it came back off this morning when people started to feel that a deal was going to happen. But we seem to have seen a little bit of physical demand down here in this 1250 level. It kind of stopped cold there. I think some shorts got chased out again. We rallied up like $25 from there. So it was a fairly impressive rally, and I think that you may be seeing that this could be a little more difficult to puncture than originally thought. A lot of people were looking for new lows for the year here, maybe breaking that 1180 level, but it seemed to hold here, so interesting.
Yeah, well, I mean, but why do you think that's happening? Why do we actually see some firm support at the bottom of this gold price?
Well, there was interesting, the EFP market here, which is the exchange for physical market, the price started to change. It started to come in a lot, which means there's some need for the physical metal. It also happened the go-forward rates came in also, so that's another indication that there was some physical demand on there. So that could have something to do with it. I think it's more of that than any news event.
And so real quickly, when you say the go-forward rate, what do you mean?
Well, the go-forward rate, it's the amount that someone will pay actually for you to hold their gold while they get an interest rate. So when it comes in, when there's there's tightness in the physical market, and that's what's happened. We had that back in June on the last drop, but as the market went higher, the go-forward rate came out again. Now it's come back in, so that could be this could be looking maybe a bottom here.
Yeah, so Tom, what are we looking at in terms of bigger action in the gold price? Do we have to hear some sort of debt ceiling or government shutdown agreement?
Well, if there is an agreement, you may get a knee-jerk reaction. Maybe they'll try to push it down again. This is a little bit of a battle here between the long and the shorts. I think they'd like to see it take out that low of 1180 and see if it can do some more damage. But the shorts, they get out quick. They don't dig in like the longs do. So they tend to run for cover. So you could see a lot of volatility here.
All right, Tom, as always, thanks so much for your take on this.
You're welcome.
Well, you heard it from Tom. Right now, they are keeping an eye on the tight range trading of gold, but now we're going to turn to the oil market. I have Paul Whitfield, he's over in Europe right now, to talk about a recent deal in which ONGC has outbid a Chinese company for Brazilian oil. Paul, how you doing?
Hey, Joe, I'm well. How are you?
I'm great. Well, Paul, what did we see in this deal?
So what's happened is you've had about 4 months ago, you had Sinochem, a Chinese company, agree a $1.54 billion acquisition of a 35% stake, which is owned by Petrobras, which is a Brazilian state-owned oil company, for a block in the Parque de Conchas field. Now, this was already owned partly by this company, this Indian company, ONGC, and partly by Shell, and the Chinese bid triggered these other two companies' ability to actually preempt the deal and match the offer price, and ONGC did that and have moved in, and that's shut the Chinese out.
So, in a broader picture, I mean, why is this such a big deal?
Look, I mean, I think we've spoken for the best part of 10 years about this sort of looming battle between the two sort of emerging market heavyweights, or emerged market heavyweights in the case of China. They're both energy poor in their own country. I mean, India imports something like 75% of all of its own energy. It needs to import the energy. They know that. And so there was this sense that there would be this battle for overseas energy assets, and it just didn't happen. China mopped it up. They were willing to bid more. They were more organized. They had their national heavyweights or their national champions in place earlier. And India was largely absent. But in the past sort of 6 months, we've seen, because of ONGC primarily, who are the natural champion in India, they're 75%, something like that, of all Indian oil comes through them, all crude. They seem to have gotten their game together. We've seen them match the Chinese here. We saw them buy a 20% stake in a Mozambique field a little while ago for more than the Chinese were willing to pay, or more than the Chinese did pay for a similar stake. Look, this is sounds like the much anticipated heavyweight show is actually on the road now.
Sure. So, Paul, in this space, I mean, how much more can we see Indian companies outbidding these Chinese companies in this race for oil?
Look, it's going to happen. ONGC has said that from now until 2030, they're going to invest $184 billion in expanding their own production. They've got a lot of cash to spend, and they've got to spend it. As I said, 73% of all Indian energy is imported, 80% of gas of oil at this stage. That's going to rise up to 90%. They've got to secure the supplies. This is the great weakness in the Indian economy at this stage, is their exposure to the volatility of the energy markets.
All right, Paul and Paris, thanks so much for your take on this deal. We'll keep a lookout for more to come.
Thanks.
That's Paul in Paris. We've heard from Paul on the oil, at least deals right now. In terms of our own oil market, we continue to see traders trying to figure out if we're going to have some sort of insolvency on Thursday. Until then, we'll keep an eye out for Wednesday when we do have the oil builds, possibility in a rise in crude. We have seen that for the past few weeks. For the Street at the NYMEX, I'm Joe Deaux.